Yo, what is up guys? So I made just around $14,000 in one day. Yes, I'm talking about one single day. And I shared all of those trades on my Instagram. I shared the proof, and here's the proof as well. I made them on my FTMO account. And I also took one trade on my Apex account, and I made just around $1,000. But overall, it's around $15,000. And I took the trade live with my members on Apex. So yeah, in this video, I'm going to break down the entire model, the entire strategy that I used to take these trades. And I use this model most of the time, like every single day. I use other models as well, but this is like my main one. And that's what I trade with live in front of members in the Discord. If you want to trade live with me, there's a 7 days free trial. The link is in the description, click on it, and you should be able to get access for 7 days for absolutely free. So yeah, in this video, I'm going to break down the entire trade. I'm going to first of all teach you the strategy, and then I'm going to give you guys some examples. And then after that, I'm going to break down the trades that I took. So make sure to keep watching till the end because this video is going to be very, very informative. All right, so the model, the trading strategy is very simple. And I promise you that it is basically the most mechanical model that you can trade if you follow the steps correctly. So the very first thing that I'm doing is I am going to my high time frame. So my high time frame is usually 1 hour time frame or 15-minute time frame. So my higher time frame for futures NQES is 15-minute time frame, and my higher time frame for Forex is around 1 hour and 4 hour. So I'm going to teach you both variations, one for futures and one for Forex. Let's start with Forex, okay? So this is how you can trade Forex with this model. So your higher time frame is going to be 1 hour time frame, okay? This is going to be your 1 hour higher time frame. Now, what you basically are doing is marking out fair value gaps, okay? So let's say that price is going down and you see a 1 hour fair value gap over here. Now, what you want to do is you want to simply mark that fair value gap out. Now, let's imagine that we are looking at Euro USD here, okay? And we also have GU. So we're looking at correlating asset or pair. So the correlating pair for EU is GU, okay? So let's say we have fair value gap here, okay? And what we want to do next is when we are on the 1 hour, we are waiting for price to tap back into this fair value gap, okay? So when price reaches the 1 hour fair value gap, what we are doing is we are dropping down to 5-minute time frame, okay? And now this is where the strategy is very important, okay? You have to understand correctly. So when we are dropping on the 5-minute time frame, when we have tapped inside a fair value gap, we are looking for SMT divergence, okay? So that's step one to take a trade, is we're waiting for SMT divergence with our correlating asset or pair, okay? So let's say that we have something like this, okay? And on GU, we have the same fair value gap, but on the 5-minute time frame, price made a higher high on GU. But on EU, we failed to make another higher high. We failed to take out this high over here on EU. Now, what I'm doing is inside this leg over here, I'm looking for a inverse fair value gap model. Okay, so inside this leg, if there is a fair value gap on the 5-minute time frame, what I'm going to do, I'm going to mark that fair value gap out. And then after we have SMT divergence, after we are inside a 1 hour fair value gap, I'm waiting for price to inverse that fair value gap. Okay, so we always want to be trading the pair or asset that is stronger. And what I mean by this is that if we failed to take out the high on EU, that means that it is stronger in terms of being bearish and it is weaker in terms of being bullish. Okay, however, on GU, when we take out this high on GU, right, that means that GU is stronger in terms of being bullish and weaker in terms of being bearish. So that's why we want to trade the one that is stronger in terms of being bearish in this example. Now, when we have inversion over here, what we want to do is we want to enter directly. So we are not waiting for a retest, or you could wait for a retest if price just closes somewhere around here. Now, there are some rules that you have to follow. So if this low over here, the closest liquidity point, is hit before your entry, then the setup is kind of invalid because we're trying to get into the trade before a market structure shift or a break in structure. Okay, so when we get inversion we close here and we have enough room, that's a good entry. So we enter right here or at the retest. Our stops are gonna be above this high over here. Now the risk management is very simple for this model, specifically for Forex. We're basically just entering here, let's say, right? And my stop, oh, that's way too high, dude. Where is it going? Anyways, we put our stop right above the high over here, and we are gonna go break even when the closest liquidity level is hit. So after our entry, let's say that price gives us our entry and price reaches this level, that's when we are going break even. Okay, now, oh my God, dude, where is it? So at 1-to-1 risk to reward, what we're doing is we're taking a partial. That could be 30% of your entire position or 40%. I stick with 30%, okay? Now the trades that I took, I didn't take partials because I was going aggressive, and it really comes down to your risk management and how much you can afford to lose or win. It really comes down to your financial status and your condition. I'm being honest with you here. So if you are good and you can afford like profit challenges, 3-4, then you can over risk. You can risk 2% or 3% even per trade during the challenge phase, not during the funded phase, okay? Because, you know, if you fail one challenge account, right, you can get another one. But anyways, when we hit 1-to-1, that's where you should take break even. And you can then target equal lows, or you can go for 1-to-2 or 1-to-2.5. That's like the sweet spot for this model, especially for Forex. And I promise you, that's the exact model that I used, okay? Just waiting for price to tap into a higher time frame PD array, could be a fair value gap. Usually I look for price to tap into the fair value gap, but it could be auto block as well. But I stick with fair value gaps. When we have price inside a higher time frame fair value gap, we look for a lower time frame SMT divergence inside the fair value gap, right? Or after price taps into it and comes a bit lower, then you can look for SMT. Now, once we have the SMT, we are looking for inversion. Now, here are some things that you have to keep in mind. Let's say there are multiple fair value gaps inside this leg over here. So let's say there's one here, right? And there is one over here. Now, in this case, you are waiting for both of those fair value gaps to get inversed. Because let's say that this one gets inversed, but this one doesn't, you're not entering the trade because it becomes risky. Price can reverse from this fair value gap. So we're waiting for every single fair value gap in the dealing range to get inversed from this dealing range low to this dealing range high. Now, what if there are no fair value gaps inside this leg, but there is one fair value gap over here? Now, you would wait for price to inverse this fair value gap, and then you can target this level. However, if the closest draw on liquidity is here, and as the rules state that we go break even as soon as the closest liquidity level is hit, now there is a change to rule. If that happens, if the closest liquidity is far away, we go break even at 1-to-1 with one partial. I hope that makes sense, all right? So now that we have the strategy, right, and of course it will look the same if you are looking to take long positions, right? Now that we have the strategy, what I'm going to do, I'm going to give you guys a couple of examples, and then I'm going to break down the trades that I took. So let's move on to the examples now. All right, I've just decided that instead of giving you extra examples, I'm going to only show you the trade breakdowns, and I believe these are going to be enough for you to understand. So this was the first trade that I took, NZD USD. What I saw was this 1 hour fair value gap over here, right? And on the right side, I had the AUD USD opened up as well, because that is the correlating pair for NZD USD. Now, after price tapped into this fair value gap, what I basically did is I dropped down to 5-minute time frame, right? And if I skip it up ahead, all right. Now what we had SMT divergence with this low over here. So on NZD USD, we failed to take out this low, but we did take out this low on AUD USD. Now what I was waiting for is to price to inverse this fair value gap. And once price inversed it right here, that was my entry, and I kind of went for 1 to 2 or something like that. And if I show you how this played out, you can see that was an absolutely beautiful trade. So yeah, basically just a higher time frame fair value gap, right? 5-minute SMT inside that level, and then we are looking for inversion on the 5-minute time frame. So over here you can see we closed above it, right? The closest drawn liquidity was here. You would have gone break even here, and yeah, that's the first trade. And also we had these equal highs around this level, so that was a plus point. So yeah, let's move on to the next trade. All right, guys, so this was the second trade that I took, GBPUSD. And what you can see that we were kind of consolidating here, but we had these equal highs around this level, right? So I knew that we were going to go there. And then I also saw this fair value gap on the 1-hour time frame. So what I did is I once again waited for price to tap into this, right? And I had Euro USD opened on the right side. So if I go here, okay, somewhere around here. Now let's go to the 5-minute because we're inside the fair value gap. And let me look closely. Okay, we had SMT somewhere around here, so let me just look closely. And yeah, it was with this low over here. And you can see on GU, we failed to take out this low, but on EU, we took out this low over here. So we would be trading this one. Now I simply waited for price to inverse this fair value gap over here because we have this fair value gap in the dealing range, right? The only fair value gap that's there. And once price inversed it, that was my long position right there, and price just pushed up like crazily. Like, look at the momentum towards the equal highs that are marked out. So yeah, that was the second trade that I took. Absolutely beautiful, and it happens every single day. So now that we are done with the second trade breakdown, let's move to another one. All right, so this is the final trade that I took for Forex, and then I took one on FX as well. I'm gonna break down that one as well. But this wasn't the cleanest. I'm not sure why, but it did play out. So we have this 1-hour fair value gap, right? And if I go onto the 5-minute time frame and I open up the correlating pair for GBP, which is Euro JPY, right? And if I go somewhere around here, okay, perfect. So I don't recall where I entered. First thing first, I looked for SMT. And I believe it was, I think it was here. Yeah. So it was somewhere around here with this high over here. We took out this high, sorry, this high, right? On, let's just mark this out like that. Okay, perfect. So we took out this high on Euro JPY. You guys can see here, right? But we failed to do so on GBPJPY, right? So afterwards, what I basically looked for was an inversion. Now, the final inversion, fair value gap in this leg is down there, just down there, right? But what I did is after inversion, I waited for price to come back and waited for a pullback till I believe it was 935, somewhere around here. So that was my first entry. And then I took another trade, like I doubled down. After price went into a bit more drawdown, somewhere around here. So that was my second trade, and my first trade was at around 935. So yeah, it wasn't the cleanest, but it did play out perfectly, hit my TP. So yeah, you can see how this strategy works out really well. Now I'm going to break down the futures trade that I took, and I'm going to teach you the rules for that, for trading futures as well with this model. All right, guys, so this is going to be the final trade breakdown. I took this live with the Discord members. I do it every single week, a live trade in front of them, 3 days a week, Tuesday, Wednesday, and Thursday, and Monday and Fridays are for market outlooks and Q&A. But anyways, what you can see here is that I approach futures differently. So instead of always waiting for price to tap into a fair value gap, I can also utilize highs and lows. So short-term highs and lows on the 15-minute time frame. And as I said before, for futures, my high time frame is 15 minute and my lower time frame is 1 minute. Okay. So after the market opened somewhere around here, I was anticipating that price is going to sweep out this high and then we can look for a short position, right? But that's not all that. We have to also look for SMT divergence once the highs and lows are swept, significant highs. Well, this one wasn't a significant high, but it was a short-term high. Okay. Now, if I go on to the 1 minute time frame here, right? We had these equal highs here, and if I open up ES here, going just around here, what you can see is that you have to look very closely. We had this SMT with this high over here. So let me mark that high out. And on ES, we took out that high. Okay. So we took out the high on ES, but we failed to do so on NQ. We have also swept the short-term high that we had. But then where is the fair value gap that we can look from, where we can look for inversion? And it is just around here. Okay. A little bit down there, but you know, when your idea is right, it doesn't matter where you enter, the price will hit your targets. So basically that was my entry, right? I had my stop somewhere around here and I pretty much just aimed for 1 to 1.5 here and the TP was hit. Absolutely beautiful stuff. And I promise you, this is the model that I usually use. Not all the time, but this is like my main one. Okay, I also trade different models, so it doesn't mean that I only trade this. But this one, you could say it's my main model. And that is the one that I trade with live in the Discord. So if you're interested and you want to join and you want to copy my trades, there's a link down in the description. You can either join the free trial Discord, right, where you get to see me live trade in front of you for 7 days. And you can also get the course. There's a link for course as well. But yeah, that's going to be it for today, guys. Thank you so much for watching. I'll see you guys in the next one. Take care. Goodbye.